With 2,000 global industry members descending on Berlin, including more than 450 LPs and 850 GPs, the stage was set once again here at SuperReturn International for the largest private equity event in the world. And with a comprehensive and thought-provoking agenda across 4 content-rich days, it delivered a unique experience for all who came. Covering German private equity, private debt, venture capital and growth, environmental and social corporate governance, and energy and natural resources, Summit Day addressed 5 key topics, all operating within the challenging current geopolitical climate.
The investment decisions you make as private equity, as an industry, are bound to be affected not only by economic and financial considerations, as it used to be the case in the past, but equally by societal risk, geopolitical risk, environmental risk, and so on and so forth.
Right, the best oil fields are in difficult countries because the good oil fields in easy countries have already been exploited, most of them. So Carlyle as a group has a global infrastructure. It has offices in different places. That helps. That's one of the mitigants. I think a second mitigant in a fund is to diversify the risk over different investments. And a third one, which is very important one also, team up with the right partners in those countries. Some countries are off the list because it's just too difficult. But the countries where we do think we can make a proper and justified investment, very important to team up with local players or big international players of very high reputation.
So we have this, I think, very toxic combination of economic sluggishness, political insecurity, and really popular despondency.
Pulling no punches, Editor-in-Chief of The Economist, Annie Minton-Beddoes, detailed the challenging global economic environment in her opening address to a packed room on day 1 of the conference.
Is that we are at the beginning of a huge wave of technological disruption. Put together big data, put together computer power, put together all the things that are now called the third industrial revolution, machine intelligence, artificial intelligence. We're seeing, and I'm sure you see it in every industry you invest in, a wave of disruption that we are, I think, closer to the beginning of than the middle of, let alone the end of.
But there was optimism too from industry leaders. Al Gore took part in the very first live-streamed session from the conference and explained how new models and focusing on sustainability can lead to better returns and even a better world.
The rising prominence of sustainability within the investment marketplace is clear evidence that this conversation has been advanced quite a bit.
And do the very best people want to come to work for you because of it too?
That is certainly true. That is certainly true. And that's true not only for investment managers who commit themselves to fully integrating sustainability into their model. It's also true for some of the businesses we invest in who get inquiries from the best and brightest graduates of business schools and other institutions who want to come to work for a company where they can make a good salary, but equally, if not more important to them, is to have the feeling that they're working for a firm and with people whose values are high, who share the values of these idealistic young people, and who are about more than simply making money. I think that's undeniably true.
That's a hugely optimistic outlook for you, isn't it?
I think that's just the way the world works. I think it's particularly the way this millennial generation thinks.
You must feel good about that.
I do.
Everything you believe in is coming together.
It's thrilling, actually.
The biggest industry names continued to offer their individual outlooks on day 2, with David Rubenstein pinpointing energy, distressed debt, opportunistic real estate and emerging markets as 4 asset classes to focus on. Meanwhile, Guy Hand stressed the importance of alignment with investors.
As an industry, we need to shift to a longer-term pay structure. And that's particularly important in an uncertain world, because there will be years ahead when private equity's returns are not good. And we've all had businesses which have had bad years. But if our management teams in those bad years don't get bonuses, if our management teams in those bad years see the value of their LTIPs go down, if our management teams are aligned with us in those years, we feel okay. But as they're getting paid and we're losing money, we don't feel okay. And in a time of volatility and uncertainty, those years will exist. And having that alignment with your investors is essential. During the good times, it probably doesn't matter. But it does in the bad times.
Day 3 saw a focus on co-investments with the very latest academic research and a full regulatory update.
My sense is in the last 3 years, private equity firms have adapted well to these new regulations with registering the SEC, of creating robust compliance policies within firms, and even hiring a chief compliance officer to help manage and enforce compliance within the firm. And I think it's up to both of GPs and LPs to communicate with regulators, legislators, whoever is examining this industry, that we're working it out. We're communicating, we're giving each other the information they need, and we're moving forward.
With so many unique international insights, exclusive analysis and research, exceptional networking opportunities, and access to the industry's key influential figures at this year's event, SuperReturn International once again proved why it is the unmissable global private equity event.